Well, look, thanks everybody for dialing in. Sorry for the technical difficulties, and hopefully we'll be able to get through this and answer any questions by the time we're done. Okay, so, no, we're not going to spend a lot of time on this slide. I just want to introduce myself. I'm Jay LeCoque, the Executive Chairman of SourceBio. I joined Source in 2016 as non-exec chair and was asked to come in and sort of help turn the business around in early 2017. This is probably more like an experience I've had with Healthcare International, if people would remember that business that was floated in the late 90s on the UK Stock Exchange. I joined in 95 and was asked to be CEO in 2000, and we had a fairly significant turnaround to do with Celsius. And without getting into detail, it was a very successful investment for investors. If you look at Tony Radcliffe's background and Russell Wheatcroft, we've got over 60 man years of experience in technology and life sciences. So we're looking at this as another opportunity to really bring a company to a successful platform. So we are a leading provider of laboratory services to the pharmaceutical industry, the NHS, and private hospitals. We've got four major areas of our business: pathology testing, DNA sequencing, controlled environmental storage, and our new business is COVID-19 testing service, which I will talk about in more detail as we get into the presentation. We were main market listed, taken private in 2016 by Harwood Capital and Continental Investment Partners. In 2019, we had revenues of $20 million, EBITDA of 2.8, growing at 47% a year. That's been a huge focus of the new management team. We are uniquely positioned to capture this COVID-19 testing opportunity, and I will talk about that when we get in more of the presentation. And we did do an IPO on AIM in 2000, mainly to scale up our COVID-19 testing services. It's really a working capital issue. It's very expensive to run this large of a testing services operation, and we simply needed the working capital to allow us to expand. We did simplify our capital structure and eliminated our debt position. We are accelerating organic growth, and certainly we're going to execute on strategic development activities as we go forward. Progress made since IPO. I mean, I'll just touch on a few details here, given the time. Admission price was 162. We raised 35 million pounds. Did pay off some debt, and we're able to fund the expansion of our testing business, COVID testing business. We did renew a testing services agreement with Spire for COVID testing. We're doing all their staff and patient testing. We've applied for this national framework for the DHSC in November, and we'll expect to hear that in late January, early February. December, we signed a strategic agreement with Oxford Nanopore to offer a complete solution with their technology and our accredited labs to our customers. And we've been very effective at calling on customers with them so that we can offer a total solution, so to speak. And then January, we were able to sign a fairly large agreement with a major UK retail pharmacy group that will allow retail purchases of COVID tests. And that's another area of growth for both 21 and 22 that we're looking forward. The share price today is about 220, so a 30% increase over the offer price in October is a fairly successful IPO in our opinion. Company snapshot. Healthcare Diagnostics, we got the four main divisions, as I mentioned. We've got Healthcare Diagnostics, about 7.5 million pounds. This is really the crown jewel of Source Bioscience. It's a very important service for the NHS. There's a shortage of pathologists, and we will talk about that in a moment. We've got a genomics business, which we have invested in recently with a next generation sequencing capability, 4.5 million, but that business is up strongly this year, even with the pandemic. Stability storage, controlled environmental storage for drug compounds and drug products and some consumer products. Another very solid business, high gross margin, recurring revenues. And then the infectious disease testing business, which we started in May, and that business will dwarf the other three. And we just announced with a trading update that we came in at 50 million pounds of revenue and an EBITDA of 14.2 million for 2020. So that the infectious disease business is a very important part of our growth and cash generation going forward. Up on the upper right, you've got the blue chip client base, just to show the level of quality of customers we're dealing with, and also to point out there are many cross-selling opportunities between these businesses. So we were able to get into the infectious disease testing business fairly quickly because of the relationship we had with the NHS. on the cellular pathology side. They'd already done auditing of our facilities. They knew our quality systems. We had a LIMS system already established with the NHS, so that enabled us to get up and running with our COVID testing business rather quickly. We were the first private company to secure a contract with the NHS. We have invested in the business. We've invested in a digital pathology platform in Nottingham. We have invested in a state-of-the-art genomics platform in Cambridge. We've invested in the United States with a stability storage site. We've invested in Tremor Island with an expansion of a storage site. And we have invested in a new COVID testing lab and subsequent expansion with the COVID growth in testing. So this was done before the IPO. So we came into the IPO with a very strong investment and position to grow the business moving forward. So let's talk about healthcare diagnostics. And I think, the slide or the graphic on the right gives a very good indication of what it is exactly that we do. So whether it's a pre-op or a post-op tissue sample that needs to be taken from either the NHS or a private hospital, they will take that tissue sample and send it to us. We will then take that sample, cut it up, process it down, put it on a slide, and then send those slides to one of our network of pathologists who will then, unpack the box, look at the slides, give his diagnosis. He will send everything back to us, including the slides, and then we will write a report and send everything back to the NHS or private hospital. I just want to talk about the slides bit for a minute because I overemphasize that, and that's one of the benefits of digital pathology is that we will eliminate the slides from this graphic where you will do a digitized image in Nottingham. We will send that digitally to one of our pathologists who will then do a diagnosis on the digitized image. So it's going to save us a significant amount of time and turnaround time, and also reduce our courier costs and all the logistics that we have going on with slides. So that's an area that we are looking forward to developing and validating and getting it up and running as soon as possible to generate those cost savings. It also gives us increased bandwidth because you've got an AI capability with the software for the digital system, which will then screen out the more base cases and allow our network of pathologists to work on the more complex cases, which is where we really target the growth of our pathologist network. We have one of the largest consultant pathologist network in the UK, other than the NHS. This business, as I mentioned, is growing very rapidly. It's been 40% for the last 2 years, 34% the last 3, driven by a shortage of UK pathologists and the continuing trend to outsource pathology. That's happening on the private hospital side. And certainly a shortage of UK pathologists is making it difficult for the NHS and other hospitals to keep up with the growing demand. One other area that I wanted to highlight was we've all heard about this elective surgery backlog that will eventually release itself, and that is going to accelerate our growth beyond what we've seen these past years. We are gearing up for that. The NHS has told us to expect a tsunami of cases, and we are very much preparing for that. Even though this latest spike has slowed it down a bit, we are expecting that the cell path business that we have will increase dramatically. So it's a very solid business. It's the crown jewel, we believe, of Source, and what we're looking to invest in going forward. Okay, so our genomics business, we consider genomics the study of genes to progress clinical research and drug discovery. There are 2 types of DNA sequencing. There's Sanger sequencing, which was developed in the 70s, and it's still the gold standard for clinical research. In fact, most clinical research is still done on Sanger sequencing systems. The one drawback is it can only sequence one DNA strand at a time. NGS, or next generation sequencing, is massively parallel and can sequence millions of strands at a time, which is why when you hear someone talking about, sequencing a genome, they're definitely using NGS technology. We have both of those capabilities. We put them in our center of excellence, as we call it, in Cambridge, which is ideally located for the Golden Triangle. It's not only, it's a great place to be, it's a great place to take customers, it's a great place to attract talent. So we're pretty happy with the center we've got in Cambridge. We did just invest in a new NGS system. It's pictured on the upper left from Illumina, which is allowing us to get into larger and more repeat projects. We did have an NGS capability that was a bit old, and it really sort of shoehorned into smaller projects. And in 2019, in fact, we had more work than we could imagine. I was being asked to increase headcount in the lab, and when we looked at the numbers, the projects were so small, we were not hitting the revenue number, and it was costing us more than it was worth to do the project. So the focus has now been on getting into more sustainable and larger projects with large pharmaceutical companies, which we are doing. In fact, this business, the NGS business, is up about 20% over prior, and that's very good in this year given the COVID situation. Another area that I wanted to point out is there is a bridge between genomics and cellular pathology that we are seeing from our customer base. AstraZeneca, for example, does tissue work with us. And then they also want to do some sequencing work with us to better develop drug compounds and also therapies. So one example is a offering that we have called EndoPredict, which allows us to do a cellular pathology analysis on breast cancer tissue post-op, and then we can put it into the EndoPredict system, and it can actually determine what chemotherapy would be best for the patient, or even, in fact, that a chemotherapy may be lethal to the patient. So it's a very useful tool for hospitals, and they are now moving to more of a proactive approach in managing their patient base rather than a reactive approach. So this personalized medicine is an important part of our focus going forward. One thing I did want to point out is we did upgrade the commercial sales team in this business as well, and that's another reason we've done so well. It's not just because we've got the NovaSeq, it's also we've got a very solid and upgraded commercial approach. The woman who's running the sales team is from the industry. She knows the client base. She knows how to quote business. She knows how to run a sales team. So it's been great to add some commercial strength to this business. And then we've got our stability storage business. And stability storage, for those that this is new to, it's really the gateway for drugs to be released to the market. So when you're developing a drug, the compounds that go into that drug need to be stable, and they need to be able to remain stable in various environmental conditions and humidity, temperature and humidity levels that would represent the climates around the world. And they need to really keep those up on stability post the drug launch to make sure the drug is remaining stable. So you'll see on the upper right, we've got a snapshot of one of our stability storage facilities where people bring in their products to us to store them. They then take them out every month or quarter, depending on the SOP, and they'll test to make sure they're stable. The benefit of this is it's a very high margin recurring revenue business. These contracts generally last about 3 years. Very not very costly to run this operation. So this is a big focus of what we've done since we've taken the business private. There are three main revenue streams to this business. Stability storage services is now over 50%. We do manufacture and sell storage equipment. In the picture in the upper left is a picture of one of our pieces of kit. We make cabinets, reach-in rooms, and walk-in rooms if companies would like to have storage in their facilities, which some do. We've got a service and validation activity that supports the equipment sold to customers. In fact, that's a larger piece of our business now, and it's more profitable than our manufacturing side. And then we've also added an analytical testing services capability to this business, and we put one in Tremor Island as sort of a test case. And I mentioned before how they'll come in every quarter or every 30 days to test their products to make sure they're stable. Well, they take those out to contract labs near our facility. We've decided that why don't we offer this in our facility, and they wouldn't need to take them out. It'll be much easier for the customer. And to me, it's a no-brainer. We did this at my former company, Celsus. We had a stability business and a testing business, and I think this is going to be another solid revenue stream for the business going forward. The need for this stability storage is increasing due to increased regulatory requirements, and we are very well positioned in the market to take advantage of that growth. So it's a nice business. The high margin recurring revenues is a very good addition to the business. And then we can talk about infectious disease testing. As I mentioned earlier, we were able to get this testing capability up relatively quickly in March and April, and we were up and running by May. The one question about this business is how long is it going to last? And this comment about the government funding is in place until March of 2022. This slide's actually outdated. That was what they were saying before this recent spike and before these recent strains that have come into the UK. So we're expecting, and we're talking to our contacts at the NHS, that this is going to last well into 22 and probably into 23 in a meaningful way from a testing perspective, because now you've got to have fit to fly test release. You're going to need passports to get into sports arenas. In fact, we just signed up the Premier Rugby League as one of our customers. So this is, the testing side of this pandemic is going to continue even when we get the vaccine out, because not everyone's going to get vaccinated. And certainly if the new strains come along, you might see a need for some tweaking of the vaccine, which then will take longer. I just wanted to point out that we're looking at this as probably a 22, 23, and we're going to do all we can to support the effort. We've established a strong supply chain outside of the NHS supply chain. Early on, they were commandeering equipment, and we decided we didn't want that to happen to us. We've signed up some of the largest private healthcare providers. I talked about Spire. We've also got Nuffield and others, and we are leveraging our healthcare clients to build a robust commercial pipeline. And as I mentioned earlier, we've got the agreement with the large pharmacy chain in the UK, and we're looking forward to rolling that out across the UK over the next months. The graphic on the right it's a bit busy. We won't spend too much time given the time frame here, but I just wanted to point out that we are offering antigen PCR testing, which is the gold standard. That's how we built the business. That being said, we are going to be offering other types of technologies, including Oxford Nanopore, which is a Lamport technology. The DHSC has us looking at other potential capabilities that we could bring out to the communities in more mobile settings. So we are looking at that, and we are working very closely with the DHSC to really throw as much technology at this pandemic as we can. And the goal for them is to contain it as well as eliminate it. So that's why they might be looking at technologies that aren't necessarily PCR, but they can give you the indications of someone who is very infectious, and you wouldn't want that person going into a sports arena, or certainly we talked about the fit to fly. So there are other areas we're looking at, and we'll expect to see that develop very soon in the first quarter. This is a snapshot looking back. I did mention this was a bit of a turnaround situation. We did take the company private back in late 2016. The old team just simply did not perform. We were down considerably over the prior year, so we have come in and really turned the business around. I mean, Healthcare Diagnostics obviously showing a nice clip of growth. Genomics, up 18% the prior year, but you did see a dip in 19. I mentioned that about how we focus too much on small projects. That business will be up this year. Stability storage, we did get impacted by Brexit a bit. If that did not happen, we'd be up 12%. So this business, stability storage, should really be growing in high single digit, low double digits. I mean, that's where we expect this business to be. This revenue really is not critically important given where we landed this year. I did want to look at the EBITDA percentage as a percentage of revenue, and we're certainly 14 is where we were 6 months into 2020. Right now we're significantly higher than that. We're looking at getting into the 20s, and we believe we're able to do that. We will be doing that as we report our results. So that's all I want to say on that. We can certainly talk in question time if we have any questions. Organic growth strategies. We've touched on these during the various bits of the presentation, but I did just want to highlight them here again to show we've got a solid platform here for growth. Drive digital pathology on the healthcare diagnostics side. That will help us grow the business, grow capacity. We can bring it internationally. There's a lot of benefits to moving the business to digital. We could better target private healthcare providers. We do have a lot of very large private healthcare providers, but we aren't very active in London right now. So there are things we're looking at to do more in London in the private healthcare market there. We could expand oncology specialties. Right now, we're mostly GI and skin, but we could get into, bowel or lung or brain. There's other areas we could expand into. We do offer those now, but we're not, I can't say that's our main focus. If we bought a business in that space or even expanded in that with an organic growth strategy, we could get into those areas. Genomics, we talked about this personalized medicine bridge to pathology. That will be an increased focus for us. And the reason it's important is, one, it does tie in a skill set that's going to be difficult to compete with. It'll give us a niche position in a high value market. And we can expand our presence in the U.S. and Ireland. In fact, we're looking at doing that right now with some important projects. Stability storage, we talked about the expansions we've done in the U.S. and Ireland. We are going to look at increasing our service capability in the U.S. Right now, we've got 3 people that are just kind of managing the needs on an as-needed basis. If we could partner up with a company that we are talking to right now about offering service contracts, it's an immediate revenue stream, and it would be something that would be a better offering for our customer base in the U.S. And obviously continue to upgrade our equipment with things like mobile apps and touchscreen technology, which you'd expect and which we have done. And then lastly, infectious disease. We want to leverage our current lab expansions, and I did mention taking our testing capability into the local communities. That will be another area of focus for us. There's opportunities to get near Heathrow and offer testing there. So this is an area where Nottingham is going to remain the important hub of our activities, but we're certainly bringing this out in a more mobile application as the testing services grow. And then expanding our services offering. We talked about doing more than just PCR, and we're certainly doing that even right now. And this is an important slide, and I really want to highlight this. So certainly, we're generating significant amounts of cash from the COVID testing business. We are going to look at doing acquisitions to underpin the base business as a result of that. But it's important to point out we're going to be extremely disciplined in our acquisition strategy. We have a process. I've used this at Celsus. We need to look at companies in the right way. They need to be strong growth, strong cash, EBITDA growth, strong management would be great. Accretive timing is very important. We have a small universe of potential targets already identified. And I talked about some of these before. We could potentially buy a lab near London. We could expand into the U.S. with cellular pathology offerings, which we're looking at, other oncology specialties. There's actually an infectious disease business that goes well beyond COVID. So there are areas we could acquire that would underpin the base business, so to speak. And we definitely want to take advantage of the cash opportunity we have now so that when this COVID thing finally does wind down, we'll have a much bigger base business from which to grow our business going forward. The other thing that I did want to point out on the slide before we move forward was if for some reason we don't have a successful acquisition or we can't find one that's worth doing, we would consider a special dividend mid-year in 20 or potentially a share buyback. That we're leaving everything on the table with respect to the cash. So I don't want everybody to think that it's just an acquisition strategy. Certainly that's our number one option. But we would certainly look at other activities if that didn't pan out the way we were hoping. And I guess to summarize, SourceBio, established leader of laboratory services of the pharmaceutical industry, NHS and private hospitals. We have invested in rapidly growing markets, and we are poised for growth. We've got international reach with operations in Ireland and the U.S., and that's likely to increase. We've got very strong EBITDA margins driven by barriers to entry. One thing I didn't talk about was our accreditation and our ISO 15189 status, which is really becoming increasingly important to not only the COVID testing business, but also the cellular pathology business. And our accreditations and our stability storage is very important and hard to compete with. We've got an unprecedented opportunity to build up beyond this COVID-19 business, but definitely, seize the opportunity here. And then the IPO funds did enable us to increase our testing capacity in Nottingham. We said we'd be at 10,500 a day by December. We did that. We are looking at increasing that capacity. I hate to say the word significantly because I don't want our brokers to increase our forecast, but we're looking to beat our forecast through increased capacity. Oxford Nanopore will be part of our increased capacity and some other technologies. We are going to look at capital. We did the capital restructure, and we're looking at future strategic development to build shareholder value. So that's sort of a summary of SourceBio over the phone, and I hope everybody was able to hear me and keep up. And I'll be happy to open it up for questions if we have any from the audience.
So we do have some questions. Bear with me a second. These might jump around a little bit, Jay. What's the likely duration of the DHSC contracts, and how many daily tests have you bid for?
What's the likely what from the DHS contract? I'm sorry.
Duration.
Yeah, the duration. Generally DHSC contracts are fairly short term. We did have a agreement that we signed in December for a surge capacity. And we have there's not a standard volume per day. Some days we'll get 7,500, some days we'll get 4,000, some days we'll get 2,000. It really depends on how busy they are and how busy their lighthouse labs are, because we're getting a lot of overflow from the lighthouse labs. This contract lasts until the end of January. And then we're looking at this framework that we talked about, this national framework that will help with the COVID activity. And I think, as I mentioned, it's, for us now, working with the DHSC, it isn't just about PCR in Nottingham. It's about many other types of technologies and offerings that we can help with the effort on the COVID side. And, working with the DHSC, they really have a war mentality where they're throwing everything they can at it. And we're part of that effort.
Is Jay disappointed in the share price movement since the results update earlier this week? And I guess and the RNSs in January so far.
Well, we did have the announcement on results that we met expectations. Share price went up. It's just around the 220 range. I think we should have some more opportunities to talk about. I don't want to oversell it, but we are working on some fairly significant developments that hopefully we'll be able to share with the market soon.
Do you feel, this is a question for me, I appreciate you've not been on the market for a huge amount of time, but slightly under the radar?
I'm sorry, what's on the radar?
Do you feel slightly under the radar, kind of not so well known yet in the UK investor community?
Well, I think that's probably a fair point. We did the IPO and we had a fairly solid offering of solid fund managers come in, but I think we've got to get more out to more of a retail environment and also smaller fund managers that might want to hear the story, because this is, look, I think from a valuation perspective, and this is just me talking, and so I can say this off the record, I don't think we're valuing the opportunity of COVID, number one, nor the opportunity of some of the potential acquisitions we can make going forward. So I just don't think we've, from my perspective, I think there's room for the share price to continue to increase as we develop our business going forward.
And I had a question here. Could you comment on the current shareholding structure?
Well, Harwood and Continental Investment Partners are still the major shareholders with something like 30-ish%. We've got some other larger shareholders that are participating, and we did pick up a significant amount of new fund managers with the IPO. We raised $35 million, so we've got a broad base. Certainly, it's concentrated with the original take private investment group, but we're moving forward and supporting all of our investors going forward.
Okay, and just in the interest of time, I think the final one for tonight, and I do hope we can get you back in the future, Jay, and kind of do this again for fresh. What is the potential store base that your retail partner could roll out your service to, and could they then also include antibody tests when you have one available?
The answer to that is we are certainly considering that as an opportunity. I didn't actually get into the antibody test, but I will share that we are looking at a particular antibody test that is able to quantify T cells and look at potential immunity and help with the vaccine rollout. So yes, we are looking at potentially using the retail opportunity as a way to offer more than just the standard swab testing. So yes, we are looking forward to supporting that activity going forward.
And can you comment on what the potential store base is that this retail partner has?
Well, I've got to be careful again because I don't want anybody to raise their forecast. They are starting off with an initial 11 of very high traffic stores that have a clinical practice. They're talking about 40 post that, and then they're talking about 100. So we're talking about a significant amount of stores, assuming that this initial trial goes well, and we're doing everything we can to support it, and there's no reason that it shouldn't go well. So without over-promising, we see a nice opportunity here as we can roll this out.
All right. I think we're going to wrap up there, Jay. Thank you very much indeed, and well done for getting on in the end.
Thank everyone for their patience with the technology. I appreciate the opportunity to speak with everyone. Thank you very much.